Good afternoon, everybody. I'm Dan Hussey with Zaner Ag Hedge here to bring you a strategy of the day update here, row crop update for April 7th, 2026. Remember, trading futures involves risk and is not suitable for all investors, and everything I talk about here today is just my own opinion and not a direct trade recommendation. But hey, if you want to get in touch with me, my number and information on the bottom right-hand corner of the screen. Feel free to give me a shout out. Let me know if anything you hear and see today you'll want to talk about and turn into a trade plan for you. Feel free to let me know. Drop me a like, comment, and follow along the stream to get more information and to stay up to date with the daily market commentary. We're going to talk about corn, wheat, and beans real quick here, go over the daily levels that we've been going over, and we'll continue to kind of develop the narrative together here into the planting season. We know that, let's begin with corn today because we know that corn plantings are underway. That December corn is still above that 475 area, but below the 18-day moving average. We'll see if that continues to hold. Front month May futures, we're going to keep it real quick today. Starting to break and test that 3-day low here into that 448 area. Lows of today down at 448 and a quarter. Highs 455, 18-day moving average traded a couple days ago there today. Now we're trading in, it's been about testing support into that 100-day moving average around 448, 55 and 200-day around 445. Let's see if those levels continue to hold. If we do break this technical area, I do think we're going to continue lower. 440 would be your next area to the downside, and 430 below that, kind of every 10 cents down, are your next areas of support. I think corn is generally carving out a much larger time frame, basing structure here. A little bit oversold in the RSI, but we'd like to see, I'd like to see some capitulation, that move down with some volume, take it into to where we'd expect to see buyers, and then some buyers from there could be supportive. Let's take a look at that short-term intraday chart here. 4-hour time frame is continuing to lower. 15 minutes here into the end of the day didn't really go out oversold, so I think there is room to the downside here in the short time frame or the smaller time frame chart. But we'll be going over the smaller time frames at a future date. Today, I kind of wanted to continue with these larger levels that are starting to break, and then we'll dial down right into the details here as price action develops. But because you look at a chart like this, over the last several months, or 2 months really, and since the start of March, we've been sideways in this range. There's not much to speak about until you break this daily range. Maize soybeans closed the day here today, 11.58, down 8 3/4 cents. That is below its 18-day moving average. We have 7 trading days where we've traded up into that area on the chart, which is really remarkable considering the market has just held it as pretty much resistance here and then. The bear flag that I think everybody is well aware of today could be the first day we're closing below that trend line resist or support. So a break below today's low of 11.55 and that low from April 1st there at 11.53. That would make for new lows for the month. I think the 100-day moving average down to 11.26 and the 200-day down to $11 would be probably next for soybeans, beans, and as we are basically just continuing to build a very, very long-term bottom since last December of 2024. That $11 to 10.60 area is going to be majorly supportive if it gets down there, but that's a big if, on the charts. Let's take a look here at wheat. Excuse me. May Chicago wheat also consolidating sideways here, 590, that supportive area. that we've been holding here. Double bottom here on the daily chart. Upward sloping trend line. This is very reminiscent of that supportive area we saw back in March. March 20th through the 23rd, 23rd through the 25th, excuse me, where we were dancing below that 18-day moving average. But we got to get back above. And if you do, I think, just like we saw in late March there, you could see a rally back up to 620 to 630. And a breakout thereof would take us to $7. But, I think this market's starting to get very exhausted when it comes to the news cycle about war. If we do break below this at 587 area, this trend line below, we're back below the 18-day already, down toward the 55, 200, and 100-day moving averages, 570 to 555. Seems like where the market would be heading, in my humble opinion. So that's kind of the area I'd be looking for on a break lower. Otherwise, we're inside this range and really trading, this 590 to 620 range for wheat, beans, here 1160 to 1180, and May corn here 450 to 4 maybe 70, but all of them threatening, to break a little bit to the downside here. So, with all that being said, thank you so much for joining me here today for our Strategy of the Day update. You can get in touch with me over here today at 312-801-4231. Daniel Hussey Jr. on X, Dan Sotd on Facebook, or dhussey@zaner.com. Have a good day, everybody, and we'll be back with you as price action develops.